I'm Marella Fernandez. Welcome to Market Call. Thanks for joining us today. Brianne Gardner on the show. She is Senior Wealth Manager at Velocity Investment Partners, Raymond James. She'll take your questions today on Canadian and American large caps. Here is how to reach us today. Call us toll free at 1-855-326-6266. You can send an email as well, marketcall@bnnbloomberg.ca. Thanks for joining us, Brianne.
Thanks for having me.
So after a run up on Friday, market scaling back today, do you feel the mood that shifted with Jerome Powell's speech will continue to spur investors?
Yeah, I mean, I think markets are a little bit entering a new chapter where we are seeing policy signals, data surprises, and earnings momentum are all shaping the tone of what's next. And I think too, headed into seasonally a weak month of September, the mood did shift a little bit after that Jackson Hole meeting where, as you mentioned, Fed Chair Powell hinted that they will or inching towards rate cuts. So, now a little bit it's going to be what is the speed and the direction of these cuts? What can they look for and how that is going to impact the stock market? I think we are seeing inflation that is cooling, but the fight isn't really over. Headline CPI that's sitting around that 2.7. We are watching core CPI that is remaining sticky around that 3.1. So, and the Fed has said consecutively they want to see it at that 2%. So for us, investors are now watching closely to see if tariffs are, beginning to feed into prices over the final months of the year, headed into the fall, and what that will look like. I think the labor market is telling a similar story, right? We're seeing that slowing, but steady enough to avoid recession fears. And a softer backdrop is kind of exactly what investors wanted to see. And equities are still holding up, firm fairly well as earnings strength does spread beyond tech. And now we're seeing this broadening out. We're watching the equal weight S&P 500 now starting to rally too. And I think with consumers and the industrial sector showing a surprising resilience there. So, there's definitely a lot going on headed into September.
Okay, so we've seen also some investors shifting away from tech, perhaps trimming while they go. What are the other sectors you see perhaps benefiting from investors moving away from tech?
Yeah, I think for us, we're watching closely on what sectors we expect to see picking up. I think overall, our approach is still to create a diversified portfolio and making sure that clients can participate when, the markets do start to shift that way. I think, Canada's narrative, especially feeling like a little bit softer echoing of the U.S., as well with their inflation. We saw a little bit of pop of real estate sector, same thing with the energy sector kind of on Friday leading the way. You're starting to see consumer discretionary stocks have a nice run up too. So, again, that broadening out of some of those sectors, healthcare starting to show some signs of strength that were weaker throughout this year. And then again, hints on potential cuts that those sectors would likely see a little bit of a boost in that play as well. So again, if you haven't had a diversified portfolio, you've been very concentrated in leadership, this would be a great time to reduce risk, start taking profits off the table. We do expect some volatility to come and look at, some sectors maybe that haven't seen that full momentum up yet.
All right, we are going to take a quick break. We'll line up some phone calls for Brianne Gardner, Velocity Investment Partners, Raymond James. We're back in a moment. Here's how to reach us. Welcome back. We're going to start today with an email from Todd. He says, what are your thoughts on Magna over the next year? Magna had a quick look at that, about $64 today. The high was last November, $65.05, so it's climbing back. Brianne, what's your take in this part of the sector, which initially was hit by tariffs, but that might have changed with the CUSMA allowances?
Yeah, Magna is not a stock that we do own in the portfolio. And you're saying Magna International, correct?
Yes.
Yeah, perfect. Okay. Yeah, it's not a stock that we do own in the portfolio, but one that we have watched closely. I think, looking at the stock over the past, still in that mobility tech company. And I think, we just are in a different space at the moment. I think over the 5 years, haven't really seen that momentum growth that you have out of some of the other stocks. From a value score, though, I mean, you have seen over the past year a nice uptick since that April bottom. If we're looking for consistency of an uptrend, longer term, yes, weaker, but it has had a nice momentum. They engage design, engineer, manufacturing in the automotive supplies. For us, it'd be a hold if to own the stock right now. I think even from a price valuation, again, seeing that run up, price target upside's about just over 3% from here. So if you wanted to wait for a favorable entry point, I would be a little bit more patient. Again, fundamentally about a 6 out of 10 for us, not a stock that we own, and you're still collecting a decent dividend yield of about 4.2% there. So for us, almost hitting that all-time highs or close to there in the market.
Got it. Okay, thanks for that. Let's move to the phone lines. Chris on the line today from Victoria, BC. Hi, Chris.
Hi, Morella. Hi, Brianne. Thank you for taking my call. Brianne, I would love to get your opinion on Lululemon. I'm a 29-year-old investor with pretty well as long as I'm still alive as a time horizon, and I'm not a big technical trader at all, but I see this stock. It's been talked about more and more lately. It's retraced so much with so much negativity baked in, I think, potentially. And I'm wondering, what sort of a outlook on the stock would you have? And then as well, if you don't mind, in terms of a percentage allotment into a portfolio with my sort of time horizon and high risk tolerance, what would be a maximum weighting you would allocate to this sort of a bet? Thank you so much.
Okay, thank you for the question. So this stock has done a deep dive from the start of the year. It's half of what it used to be. Brianne, can you talk about what has dragged the stock down and whether you see a recovery here?
Yeah, and listen, I've traded Lululemon before, and I love Lululemon. When I'm not wearing, my BNN get up, you can catch me in Lululemon wear. But unfortunately, the stock just hasn't participated. They've had a lot of issues with international markets and recovery. Headed into the men's sectors. We don't currently own the stock. And the consumer discretionary space has been squeezed a little bit, but they still are a global leader in the premium athletic wear, which we watch. I think analysts are forecasting about a 54% upside from here. So yes, that is more of a riskier stock for me that I see for, price target around 319 is what we're seeing. Earnings per share growth is expected to accelerate in 2026. I think they do have a little bit more premium pricing that when we are cutting consumer spending, this is something that will get cut. I think intense competition still from other competitors like Athletica, Alo has been a big one, and Nike. So that has hit the stock a little bit. Again, bullish longer term. I think analysts rate it currently a buy with strong earnings momentum. For me, I would wait for strong conviction of a turnaround before getting in the stock. And from a weight perspective, to be safe, I would say tranching into a position like this that is more volatile. So, if you wanted an overall 4% weight in your portfolio, maybe doing 1.5 and tranching in at that, or 2 and then 2 again. But for me, again, this has been on a consistent downward trend, and I would need strong conviction before buying this stock to see that upside.
Yeah, and good advice to sort of step in at different points just to calm your nerves down a little bit for a stock like that. All right, Chris, I hope that helps you out. Let's go to Elliot. He's in Hamilton, Ontario. Hi, Elliot.
Good afternoon. The logistics company, Descartes Systems Group, seems to be mired about $30 off its high, apparently because of some securities violations or lawsuit or something. Do you have any information on this situation? And is DSG therefore going to be dead money for the next 3, 4, 5 years until the lawsuits are settled? Thank you.
Okay, thank you for the question. What's going on with Descartes? Do we know?
I'm sure you'll pull this up while I'm talking. Not all I don't own this stock, so again, not following it as closely for what's happening in the media or in the news there. For me, I think it's in that tech, supply chain, logistics, software, powers global trade and logistically network. Think of like digital backbone for shipping and freight. Yes, the stock has dropped 13%. I saw after that AI rollout that was underwhelming. Morgan Stanley kind of initiated coverage with equal weight. High valuation for us. I would say PE is a little bit high right now, 61 times underperformance versus the tech peers too. Competitive pressure as well. So, you still see on the street a decent buy, about 8-9% upside from here. Again, momentum is improving, but we own CRM and IBM instead of this stock. So both offer broader enterprise software exposure and for us better valuation. So I think DSG is more niche-y and high growth, but not a core tech hold today.
Okay, we hope that helps Elliot, and we're going to go to Jim in Chatham, Ontario. Jim, what's your question today?
Oh, thank you for taking my call. I was thinking of selling 20% of my TD stock that I got an average price of 66 on and buying that money into Tourmaline. What do you think of that idea?
Okay, thank you for the question. Brianne, Tourmaline.
Yeah, and sorry, was the first one TD?
TD is what I think he bought in at 66 and it's now above 100. So he's made his money on TD is what he sounds like, and he wants to switch at least some of it over to Tourmaline, which is at 57.35 today.
Okay. So yeah, we do own a few clients of ours own Tourmaline, again, in that energy, oil and gas. I do think, seasonal momentum you could see from that business. I think Canada's largest natural gas producer, stocks down about 7.6% over the past year. Earnings did beat in July, which is something, we were watching closely. I think strong free cash flow, low debt, which is still really good for a company. Something that, could be is commodity price volatility, obviously, we do see, and weak investor sentiment. So, that has been some quite volatility in the stock that you can see there, even especially over the past 3 months. I think, you're still seeing a moderate buy across the board upside if gas prices do rebound from here. But for us, even looking at a valuation or price upside from here, price target, about 1%. So RSI near oversold, trading below 50-day and 200-day moving averages. I think, yes, it's attractive for value play, but for us, we would be holding. We own C&Q instead, which I believe is a stronger yield and diversified oil and gas mix for our exposure there.
Got it. Okay, we will have to take a quick break. We're going to be back with Brianne Gardner of Velocity Investment Partners. She's taking your questions today on Canadian and American large caps. Back in a moment. Welcome back. Thanks for joining us. Let's go to a caller on the line. Daniel is holding in Markham, Ontario. Hi, Daniel.
Hi, Marella. Hi, Brianne. Great host and one of the best guests. My question is on Taiwan Semiconductor. Is this a company you're interested in buying? And what entry point would you try to buy it at a pullback, or am I late to the party? Thanks for taking my call.
Okay, thank you for the question. Taiwan Semiconductor at 237. It is up $4 just today. So what do you think of the entry point, Brianne?
Yeah, listen, this stock has had a nice run up too, and has been for sure, doing very well, and still is one of the largest semiconductor foundry, manufacturing the chips behind kind of Apple, Nvidia, Qualcomm's innovation. Think of them as the engine, I say too, that are like the AI smartphones, cloud computing. From an entry point, again, I would be a little bit more patient. This run up, as much as you sometimes want to chase returns, I do think it is important to make sure that you are not necessarily always buying in at a peak. I think you could see a little bit bit of a pullback here. It looks like it's trying to consolidate, which isn't a bad thing. RSI was a little sold back to equal, so something that we are watching for sure. Overall, fundamentally, the company is still extremely strong, right? For us, it ranks actually a 9 out of 10 fundamentally. But even looking at upside from here, I mean, analysts still could see 15% upside. For me, if you do own the stock, I would continue taking a little bit of a profits here and again, continue to ride it. If you're looking for a favorable entry point, I'd be a little bit patient and try and see if you could get closer kind of to that 220. Again, not to be too greedy, but there looks like there's a strong support level there. So for me, that's where I would look to be taking a position on this stock.
Got it. Okay. Daniel, I hope that helps you out. We're going to move on to Mateus, who's in Ottawa today. Hi, Mateus.
Hey there. My question is on Dollarama. I love the company, but at 45 times earnings, it trades at a premium. So I'm wondering if I should add, sell, or hold.
Okay. Thank you for the question. Dollarama's at 192.68, and it has been up there since sort of, I guess, the end of June. So most of the summer. Would you wait for a pullback to put some more money down?
Yeah, I love Dollarama. I think this stock's great. I do agree with you. Personally, I would look at waiting for a little bit of a pullback. I think you're seeing price target upside on the street about 2% from here. So, you're not really getting that risk reward. Has been on a steady increase though. And still, Canada's largest dollar store chain. They have more than 1,600 stores nationwide. And the growth story is real, right? You are seeing they're opening 70 to 80 stores a year. That is big. And now international expansion is just getting started. So I still think the company is going to continue to be profitable in the next, 3 to 5 years. I'm certainly not saying that. And you have, even if you look at the longer term chart over 3 years and 5 years, that stock has been extremely consistent and impressive in the earnings momentum. Last year, we saw earnings per share growth of 17%, and management expects another year of double-digit growth. So again, margins, and as you mentioned, just the price right now, I would be a little bit patient for an entry point. Not to be greedy and see a huge sell-off, but if you could see that value, the stock or valuation come down and see even a 7 to 10% pullback, that would create a long-term entry point for Dollarama.
Got it. Okay, let's move on to another caller. We have Frank on the line from Huntsville, Ontario. Hi, Frank.
Hi. Okay, I've got one question, but there's 3 parts to it. I don't know whether to buy TD Bank or Royal Bank, okay? And they're coming out with earnings this week. Would you buy before the earnings come out or after the earnings come out, so hopefully get a bump? And thirdly, I just wonder if you think that Royal Bank will split because it's so high. I'll hang up and listen to the answer.
Thank you for the question. Interesting question about the split. We were having the conversation the other day about how that seems to be more rare these days than not. But first of all, your take between TD and Royal Bank. Where should Frank put his money?
Yeah, and that was a great chart that you guys are pulling up, and thanks, Frank, for the question. For me specifically, we prefer Royal. We own Royal and prefer it over TD right now. Again, that can change, but Royal has just delivered record results. I think growing their earnings 10% year over year. They're really firing at all cylinders across lending, wealth, capital markets. TD, on the other hand, they were in the news, I feel like a year and a half ago, went through a rough patch. Their U.S. business, is under regulatory cap, which does limit some growth, and that's what we're watching. So, they are dealing with compliance, restructuring costs that are eating into profits. So for us, Royal is the stronger position to invest and to continue to see growth and upside from here.
Okay.
And then about the split, I would agree with you. I think we are seeing it less and less. Will Royal split? I don't think so at this time. And, I still think Royal has more upside, and I still think that investors will be paying for this price. And do they need to split? Not necessarily. So I think at this point, I don't see a split right now.
Got it. Okay, we're taking another quick break. When we come back, a look at Brianne's past picks. That's coming up next. Welcome back. Time now for a look at Brianne's top picks from August 19th, 2024. At the time, at the top of her list was Visa on the New York Stock Exchange at $266.47 US, now up to $348. 51, so a 31% upside return, total return 32%. I was looking at Visa here at the start of the year. It started at about 316 and has been a little all over the map, settling in around that 350 mark today. Are you holding on to Visa?
Yes, we still hold on to Visa. I still like Visa. I still think there's upside for Visa. And, you know, they're one of the best known players in kind of that global payments. And this quarter, I think, reminded of us of that, right? We saw strong double-digit revenue growth, and that reflects their durability, even mixed macro backdrop. So the real story is how Visa is continuously evolving. I think we're seeing their value-added services like fraud prevention, analytics grew by 20%. And again, I think that's contributed more than a quarter of their revenue. So for us, the fastest growing, a faster growing business and still high margins. Cross-border transactions continue to be healthy, even with all the tariff stuff going on. And operations margins are, still best in class. And again, we see upside. So they did over $6 billion in buybacks and dividends last quarter alone. Strong fundamentals, high margin, and a healthy balance sheet. Again, why we continue to like Visa.
Okay. Also, last August, you picked Chevron as your second topic on the New York Stock Exchange, 146.83 at the time, U.S., up to 158.08, so an 8% return, 12% total return. It's hard in the energy field, right, especially with the price of oil where it is. Is Chevron something you have held on to? Have you trimmed back at all?
Yeah, so we did actually sell out of our Chevron position late last year, and we saw a profit there, and I think it still shows the company has done well. As you saw, volatility a little bit, energy cycles, and yes, we still like the stock. I think there's profitability. I think you're seeing now the stock trading at just 11 times 2026 free cash flow and a dividend yield near 4%. So investors are still getting that cash flow from the stock. But we think that and thought the risk reward, at that time wasn't as attractive. We would look at trading the stock for sure. I think you can trade this stock and wait for a bit of a pullback. I think fundamentally, again, I like their business. I like what they're doing, but you also don't want to overpay for it. So right now it ranks a 7 out of 10 for us. So back on our watch list, 1 year still earnings growth down about 14%. Again, you're still collecting that dividend yield, and longer term or year to date still up. Upside potential from here though, only about 7%.
Got it. Okay, let's get to your third pick from August last year, which is CN Rail on the TSX at 155.04 at the time, now 132.09. So it's dropped 15% in returns and 13% for total return. We've had a lot of questions about the transportation sector, which has also been depressed so far this year. You bought in or recommended it last August. Are you continuing to hold CN?
Yeah, same thing. We did sell CNR actually in January at 153 a share. And since then, as you can see, the stock has pulled back double digits. CNR is still one of North America's leading freight railroad moving goods across the continent, right? We still like the stock. I think after a tough start to the year though, and we did see that happening, CNR is starting to look to regain its footing. I think volumes are stabilizing, management's tones is like pricing in, getting a bit more confident, which is, I think the big story is going to be on their operating leverage. So Q2 revenue was flat. Operating income still grew at 5%, showing that they are getting more efficient, even without kind of that top line growth. So for us, they have looked to reaffirm their full year guidance, which does reflect a confidence in both cost control and volume recovery through this. So valuation's fair right now, but to us, the numbers didn't look good. And, we sold out of it. We see potential upside from here, 8 out of 10, but could look at picking it up again. Again, right now you're looking at analysts see a potential 20% upside from here. But again, I would be selective, and we patient on this stock.
Got it. All right. Brianne Gardner sticking around. She's with Velocity Investment Partners, Raymond James. Your questions on Canadian and U.S. large caps when we come back. Stay tuned. Welcome back. We have Brianne Gardner with us today, and we're going to a phone call from Michael in Vancouver. Hi, Michael.
Hi there. I had a quick question about Amazon. We're over the big tech bubble, but in the beginning it was just like it was $1,000 per share. Now it's 100. I'm just wondering why that is. Where did they go wrong? Is it a good investment for family, seniors, or anybody really? Thank you.
Okay, thank you for the question. Okay, so it did go down April and May, which when everything was kind of dragged down, it has come back. It's up to 228.62 at this point. Brianne, do you like Amazon? Is this out of the big sort of tech companies? Do you favor Amazon at all?
Yeah, Amazon is a stock that we do own. I do like the company. We actually added, they had a pullback after earnings in, I believe, the beginning of August. And we actually added to our position tactically there. So Amazon, I think you can play some technical as well. Fundamentally, we still like the company, ranks a 9 out of 10 for us. And we think that they're not just dominating the retail space, they're rewriting kind of the rules of AI and automation as well. So for us, looking at the optimization that robots now handle 40% more packages than last year is wild. But when we did see their revenue jump 22%. So this AI push is not going anywhere, and it's serious. And Amazon's kind of Gen AI business is growing triple digits. So, they have tools like their Bedrock, their Claude, but supply is a little bit lagging, and that's something that we're watching. Power and chip demands are outpacing their availability. The AWS we saw grow 17%, which is solid, slower than some rivals like Azure there. But, I think their fulfillments are getting faster and smarter. Same day delivery is expanding into thousands of small towns. And I see that too up in cottage country. And for us, it's still a stock that we like. Amazon is firing, I think, too, on all cylinders and doing very well. So yes, we continue to hold. And I do like that stock for seniors as well.
All right. Michael, I hope that helps you as we move on to Chris from Hamilton, Ontario with a question. Hi, Chris.
Good afternoon. Thanks for taking my call. I'd like Brianne's view on Whitecap. It pays a good dividend, and I realize it's stalled a bit because of the way oil and gas has been acting lately. I just wondered what your outlook for it is, and would you continue to hold it, or would you consider maybe taking some profits?
Okay, thank you for the question. Whitecap currently at 10.14, and it's hard, right? We talked about the price of oil, which I looked up today was about 64 and change, and then natural gas. People are sort of waiting for natural gas to bounce a little bit now that we have more distribution across the country, ways to do that. What's your take on Whitecap, and then if you can expand sort of energy in general?
Yeah, listen, I think Whitecap has, even over the past year, has kind of treaded a little bit sideways, as you mentioned too. Where energy and oil are going to go will definitely impact Whitecap, I believe. Not a stock that we do own, but Whitecap still, in that pure play natural gas producer, focused on kind of longer life, low decline assets with strong free cash flow. They did close that acquisition of Raymond that updated their guidance in 2025. I still see their management is strong. Insider ownership is good. High payout ratio is something that we would monitor, and commodity price, as you mentioned, volatility and integration risk, kind of post that deal. So we're still bullish longer term on this stock, and you are seeing, double digits, 28% upside from here. So momentum looks to be improving, breakout again over that $11 confirms kind of a 2-year range breakout. Next target for us would be about that $14.50. So attractive for a short-term rally. Instead, we own CNQ I think, leaner, more gas-focused and better for tactical exposure.
Got it. Okay, we hope that is good for Chris. Let's move on to Mike with a question. He's in Toronto. Hi, Mike.
Hi, thank you, Ms. Gardner, for taking my call. I know a lot of people call to ask about Enbridge, but relatively few of them ask about the Enbridge litigation with the Indian tribe in Wisconsin and then against the Michigan government over the Mackinac Straits. As an analyst, do you ever look at what would happen if that litigation went against Enbridge? And if so, do you have a view that you could share on whether it means that maybe you should stay away until that litigation is settled? Thanks very much.
Okay, thank you for the question. Is that something you have sort of read up on at all, Brianne? I don't know if it's something that falls on your radar.
Yeah, I did hear, they are in litigation. I think it was the state of Michigan over that oil pipeline. I don't know the ins and outs of every little thing that is being addressed. But anytime a stock, I think, is in the news, we certainly take note of it. A prime example, same thing, UNH, which was a stock that I did own and sold. Again, market, news and media can certainly move a stock. And I think it is important to assess, is this going to be a short-term play? Can the company get out of it? Is it going to be detrimental to the stock price, or is it just going to create short-term volatility? So for us at this point, we don't see anything unfolding to longer-term, detrimental to Enbridge, the stock or the company. And it is still a stock that we do own in the portfolio and like to own. And I think the natural gas side of the business is certainly picking up steam. They did have a strong quarter there, and that's thanks to their recent acquisitions, steady demand, gas transmissions, utility earnings were both up big. I think the oil side is still facing a bit more pressure. Volumes dipped slightly, and competition from kind of the new Trans Mountain pipeline is starting to change how crude oil flows out of Canada. So I still see Enbridge as adapting to those changes, and gas now nearly makes up half of their total earnings. So that's up from over a third 2 years ago. So they are shifting and balancing and creating that stable mix. So their dividend's still over 6% today, one of the highest dividend yields that we like in a stable business, and we continue to like Enbridge at this time.
Got it. Okay, we will have to leave this block there. Brianne Gardner sticking around to take your questions today on Canadian and U.S. large caps. Here's how to reach us. We're back in a moment. Welcome back to Market Call. We're going straight to Jeanette. She's on the line in Toronto. Hi, Jeanette.
Hi. Brianne, thank you for your past picks. I own all three. But today I'm calling with regards to Mondelez International. They did attempt to buy Hershey's, and it was rejected. But ever since then, the stock is falling really continuously. Their dividend is at 2, and it's paid at the end of September. Is there any point in holding on to that, or should I cut my losses? Thanks very much.
Okay, thank you for the question. Mondelez Food Distribution. Brianne, is this a sector, first of all, that you see sort of gaining strength? Mondelez today at 62.13.
Yeah, I think the manufacturing, marketing of snacks, food, beverages, they do biscuits, chocolate, gum, candy, all of those things, major names, Dairy Milk, Cadbury, Honey Maid, all of that. So, and they are still international segment, right, which is important. The consumer staples and packaged food industry, is a staple, but as, you mentioned, it's kind of been flat, and analysts still forecast about a 12-month upside, about 75, 56 from here. So still upside in the stock, again, currently around that 62 per share. We did see their Q4 beat, but volume mix turned negative. So again, I think cocoa costs remain a headwind for the stock. High prices there, and that's, as the caller mentioned as well, exploring potential acquisitions of Hershey could reshape their landscape. I think some weakness we're cautious of is volume softness in North America and pricing pressures from raw materials. As well as declining earnings exposure to interest rates, commodity swings, which we likely will see. So analysts still remain bullish longer term on this stock. For us, it's a 7 out of 10 from a value. And again, I think down 17% from the highs. RSI is neutral. Attractive for a value trade. Again, not a stock that we own. We rather own Costco or Dollarama at this time.
Got it. Okay, Jeanette, I hope that gives you some clarity. Let's go to John in London with a question. Hi, John.
Hi, Marilla. Hello, Brianne. Nvidia reports Wednesday. South of the border, they are getting in better regard with the emperor. And I'm wondering, they're probably going to beat on revenue handling and on profit. Their guidance will be an issue as Jensen, he'll understate the guidance. Is this a good time for an adding to Nvidia? Thanks very much, Brianne.
Okay, so Nvidia is in a range where it's up above 181 today. I just got to double check to see if that's the highest it's been, but it's high at this point. Would you dip in knowing that the earnings come out on Wednesday? Would you sort of wait a little while if you want to buy up on the stock?
Yeah, for me, I think just the run up I've seen in Nvidia looking at the stock, and it is a stock that we do own in the portfolio and have, tranched in, taken profits multiple times. So for us, you're still seeing potential 8% upside from here. Mixed, buy, outperform. Some analysts are shifting to a hold. I never really like to buy a stock ahead of earnings. Just if you do see guided expectations adjust or any sort of impact from tariff, especially on the chips, that could have a short-term sell-off on Nvidia. So, yes, expectations are high, and they've been navigating geopolitical headwinds, I think, but there's still AI momentum hasn't slowed. So again, we still like this company. I think the Blackwell chips are ramping fast. We're confident that the company can still beat this quarter. But, what is the upside risk you're going to get from here? Again, we continue to hold. We want to continue to hold. But if I was getting in from an entry point, I would be patient. I think you're seeing the return of China shipments. That could be a meaningful tailwind as well. And the market has priced in some of that lost revenue. But the licenses are now granted. So they might claw back a good chunk of that. And still make, it isn't just chips. It's Nvidia is creating almost a whole ecosystem. They're expanding into, sovereign AI infrastructure, striking deals with cloud players like CoreWeave, and really continuously evolving. So valuation is the sticky point for me.
Okay, Nvidia, the last high was this month, the 12th of August at 183, and it's at 181, so sort of gaining back some of that ground ahead of earnings today. Okay, let's move to Ian. He's in Winnipeg with a question. Hi, Ian.
Yeah, I'm wondering about TELUS. With the cuts on interest rates very soon, what will this do for growth in TELUS and its dividends? Regarding the big layoffs in jobs in February 24. And pardon my ignorance here, but does TELUS own BCE, or does TELUS own stock in BC, or are they just big competitors?
Okay, we go to Brianne. We do have to mention BCE, parent company of this channel, under the Bell Media division. We'll talk telecommunications spaces. TELUS is at $22.96 right now, Brianne. It's a little bit up on the day. But generally speaking, telecommunications, some are beginning to see a little bit of a bounce back for them. What do you see?
Yeah. And, I think slower than a lot of people had anticipated. And, yes, Bell and TELUS have been kind of moving a little bit differently. We own TELUS, continue to own TELUS over Bell just from upside potential that we did see. Even looking at a 1-year chart there. And TELUS still scores a 9 out of 10 for us. So you're still getting a healthy dividend yield, I believe, around 7%. And it's still one of the core, communications, mobile internet services in Canada. Their growth is, yes, a little bit slower right now. We saw revenue rise by just 1.3% last year, and 2025 is off to a little bit of a softer start. But I think that's stable, essential services business. We're not expecting fireworks from this stock. This isn't an Nvidia stock. This is a staple where you're going to continue to get growth over time and collect that dividend yield. You're not going to see the capital gains appreciation that you are from other stocks. And that is what is so great about this stock, is that the dividend is is the key reason that we own it, right? Is that you are still collecting income from this company, and it's not going anywhere in the long term. One of the highest yielding in the market, still cash flow is expected to improve, and they're carrying, yes, a little bit of a heavier debt load, but they are deleveraging mode, which is good to see and something that we want to see out of a company. Yes, the stock's down meaningfully off its high, now trading at just 13 times earnings, but we are still comfortable holding this name, collecting the dividend, and waiting for that fundamentals to stabilize.
Okay, and just to point out, yep, Telus, separate company from BCE. They are competitors, no co-ownership there. All right, Ian, I hope that's good for you. That's all the time we have for phone calls and emails. Brianne will stay tuned and stick around to share new topics. Back in a moment. And join us tomorrow for Market Call. Darren Sissons on the show. He's partner and portfolio manager, Campbell, Lee and Ross Investment Management. He'll take your questions on global and technology stocks. That's tomorrow. Time now for new topics from Brianne Gardner, and we start with IBM on the New York Stock Exchange. IBM, sort of late June, I'm looking at, was up at 294. It's dropped down to 241, but you are looking at perhaps a bounce back somewhere. What's going on with this company?
Yeah, IBM is a stock that we picked up recently and one that I do like. I think they have, transformed themselves into a hybrid cloud and AI company. Software does remain the engine, growing 8% last quarter, but some clients are pausing, I think, or we're seeing on spending right now. And we believe that's just short term, right? I see them as a Gen I pipeline. They're gaining transaction. They now have $7.5 billion in Gen AI related businesses, up $1.5 billion from last quarter alone. Margins are quietly improving thanks to software revenue and automations, which we're looking at. Again, decent yield at 2.78, you can see there. Cash flow still remains strong. And really, IBM is a real contender in the quantum race, which is what we like. So one of the few building real hardware. They're targeting enterprise ready systems by 2029, which could unlock new commercial applications. So for us, upside potential, we see about double digits, 18% from here, which is important for us. And still, looking over the longer run, year to date, up about 12 months, up about 27%. So we still like the company, market cap around that 225 million, but we are, or billion, sorry, and we still like it and we still want to own it.
How long ago did you take a position in it? Was it sort of on that downward slide from the end of June?
Yes, we did take a position in late July, actually. We saw the sell off. We looked at valuations. We look at RSI from a technical perspective on favorable entry points, and it was hitting all of our targets on when to pick it up. And so for us, that did target us to say, okay, looking around July 31st, do we want to pick up this stock? Yes or no? And we decided to take a position then. So again, we see more upside from here, down a little bit from where we bought it. But again, we are expecting double-digit returns from this stock.
Got it. Okay, let's go to your next topic, which is Salesforce on the New York Stock Exchange. This is a company that has software management for business relationship. But tell us more about what they do and what they're moving towards that you like, that you're going to invest in this stock.
Yeah, listen, I think the collection of data is becoming more and more important every day, especially large corporations. I think even maybe it was 2 years ago, RBC switched over to Salesforce platform. I use Salesforce for our CRM. Collecting consumers' information and being able to pull it up in a consolidated way. And Salesforce has done a really great job at this. They are the global leader in that CRM software and really the pioneer in letting businesses use that software, which we now call SaaS. We like the company company also, because it's not just that, it's becoming an operating system for the modern enterprise. So, you're still seeing majority of analysts rating it a buy on the street. They have a customer 360 platform that's now integrating data cloud, agent force, connects you to real-time AI-driven insights, and is already delivering reoccurring revenue from their AI and data cloud that has surpassed $1 billion. So that's up 120% year over year, a big part of what we're seeing from a business. Valuation to us still remains attractive, trading around that 22 times forward earnings, near the lower end of the historical range for the company. And again, we see their scaling platforms, expanding margins, and really making it one of the most compelling names in that large cap tech name. So we see about 40% upside from here on CRM. We're patient. We like the stock, ranks at 8 out of 10 for us fundamentally, and we're looking to see how CRM pays off for our clients.
Got it. Okay, let's get to your last pick. We only have about a minute left. It's Brookfield Infrastructure on the TSX. Brookfield owns a number of different things. You said pipelines, railroads. What do you like about Brookfield?
Yeah, and I think for us, why we like it is we have seen a little bit of pullback in the stock. You can see there, right? It did have a little bit of sell-off, creating a great favorable entry point for investors. Business is holding up well. Last quarter, they beat expectations, strong results in their midstream energy and data infrastructure. The data segment is up 45% year over year. They're putting money to work constantly. Recent deals in the Colonial Pipeline, U.S. fiber business, adding about $1.3 billion in investment. Stock still yielding about 5.5%, so great for income investors. Steady compounder for us that keeps delivering across cycles. So, we see upside potential of about 30% from here, and continue to want to own BIP.UN.
Got it. We do have to leave it there. Brianne, thanks for coming in or joining us today. Appreciate that. And thank you for watching Market Call today. We'll see you again tomorrow.